GE Vernova up a whopping 90% since spinning off from the former General Electric in late March. It surged 45% in Q3 alone, the second best performer in the S&P this quarter as power demands for AI and data centers soar. The stock initiated by a slew of Wall Street firms recently, with a majority of analysts putting a buy rating on the stock. Our next guest is among them and thinks there's even more upside from here. Julien Dumoulin-Smith is a managing director at Jefferies, covering power, utilities, and clean energy. Julien, great to have you with us. I believe in your note you said it is decisively your top pick. I mean, putting it very simply, power demand goes up and Vernova benefits, period?
Yeah, I mean, they're selling the picks and shovels, right? We got a gold rush going on. And frankly, they're the best positioned globally here to supply into the U.S. market. Really just it ends and starts and ends there, right? You got wind, you got gas turbines, you got everything you need, electrification equipment, transformers, etc. You've got it. They have it. They want it. They'll price up on it. Margins are heading higher. We're meaningfully above street across the board.
We've been hearing recently about a lot of nuclear deals being aimed, and a lot of these sort of data center operators want the cleanest clean power. Nat gas is relatively cleaner, though. Are they at a disadvantage a little bit because they're not going to gain as much when nuclear reactors get restarted?
Look, I think that's a very, frankly, limited opportunity. We're really not going to see a lot of that in the near term. The U.S. really needs dependable gas power here in the near term to complement otherwise intermittent renewables. I'm not saying it's one or the other. It's an all-of-the-above strategy. And really, in the near term, that's really where orders are going to surge for this gas business, right? When you look at top-line revenues, I mean, we think it's almost double-digit 5-year CAGR. That's half of what management's talking about here. That includes both their wind business and their gas business. So, look, they can win clean, they can win dirty. It's all of the above. And what that means in terms of dropping down to the EBITDA line is we're 11% above street on 26 here. We see EBITDA margins trending into the mid-teens. They're only guiding to 10%. Look, this is one of the clearest stocks we've covered in a while. We're way above management guidance. It's incredible how conservative they were out of the gates of the spin here. We think they meaningfully take up their guidance expectations at their analyst day on December 10th and couple that with a meaningful buyback and dividend announcement. This company stepped out of the gate defensive. It's going to close the year being one of the most offensively positioned companies we cover.
Julien, I'm curious, what are your thoughts in terms of what the mix is going to look like? Because so much of the data center, it's really baseload power that they need. Are they going to kind of keep this business mix the way they are, or it's more going to be a function of regulation?
Look, actually, what's interesting is you're seeing some of the biggest orders enabled by states stepping in, seeing a lack of power investment, right? I think you've seen real underinvestment in gas in the last decade. You're seeing states like Texas put in some of the biggest orders we've ever seen in the history of power. That just happened in the last couple of months here. We think the state legislature is going to double down on that again. Couple that with Ohio and Pennsylvania looking at doing similar things. I think that's the real narrative here is the world is going to pivot back towards gas to a certain extent. Again, I really want to emphasize they win on both. But the gas narrative is going to stay here for the time being. In fact, one of the points that you guys keep putting your finger on here is this idea that is gas sort of temporary, if you will, and transient. I think that's why you're not seeing as meaningful expansion of manufacturing capacity. That helps create much more of a backlog business than you've historically ever seen with this kind of a business before. You're going to see that all the way out through 2030. And more to the point, that's where the pricing power and inflation is really playing itself out. Anecdotally, we're up at least 20% year over year on the cost of these gas turbines. How much of that's accruing to margins, we shall see, and their parts business. But again, that's the real secret sauce here. I'll leave it there.